After 3 very strong years for the S&P 500, a lot of investors are asking the same question. Is there still room for this market to run? Welcome to this week's Element Edge. My name is Diego, and I'm breaking down what's happening in the economy so you don't have to. What stands out right now is that the market is being driven more by earnings growth, not just higher valuations. Wall Street consensus expects S&P 500 earnings to grow around 14 to 15% in 2026. That earnings outlook has been a major reason stocks have continued to push to new highs, even with some volatility along the way. So that said, investors remain cautious. Earnings growth expectations are running well ahead of overall economic growth, and that gap makes people uneasy. Consumer confidence remains weak, and many households are not feeling the same optimism reflected in those stock prices. A big reason for the disconnect is where the earning growth is coming from. Technology companies, especially those tied to AI and data infrastructure, are expected to drive a majority of earnings growth next year. These investments boost productivity and profits, but they rely more on capital than on people. So building data centers and AI infrastructure does not create the same number of jobs and wage growth as traditional industries, so the benefits don't flow evenly throughout the economy. Financial companies are another contributor. Strong markets, IPO activity, IB and M&A revenues. But again, this growth helps balance sheets and profits more than it helps the everyday consumer. The result is that the market can continue to perform well even while the broader economy feels uneven. Most consumer spending still comes from the middle 60% of households, and that group remains under pressure. So the takeaway is not that the outlook is negative, but that it's fragile and uneven. Exposure to innovative companies remains important, especially in technology, and at the same time, it makes sense to manage this risk by diversifying across regions and markets to account for economic and political uncertainty. If you found this perspective helpful, follow for next week's outlook.